Every trader begins the same way. They sit down at their screen, their heart pounding, their mind full of ambition. They imagine themselves conquering the charts, turning every candlestick into profit. But as the market opens, something changes. The plan they rehearsed in their head disappears like smoke. The confidence they carried in their chest begins to crack. What felt certain just moments ago now feels fragile. This is the reality most never admit. Trading is not just numbers, not just lines on a chart. It is a battlefield of the self. And on this battlefield, most do not lose to the market. They lose to themselves. Fear, greed, arrogance, and desperation creep in silently, guiding hands to click at the wrong time, urging minds to hold when they should release or to chase when they should wait. The market itself has no opinion. It has no care whether you win or lose. It only reflects who you are. It is a mirror sharper than glass, revealing not only your skills, but also your flaws, your hidden impulses, and your old wounds. For some, this reflection is too much. They quit, defeated not by price action, but by their inability to face themselves. But a few, just a few, see something different. They recognize that the market is not an enemy. It is a teacher. It is a dojo, a sacred space where discipline, humility, and patience are forged. Those who endure long enough begin to realize that the true game is not about predicting price. It is about transforming identity. This story is not about shortcuts or secret indicators. It is not about magic formulas that guarantee success. It is about the rare mindsets, the hidden ways of seeing, that separate the many who fall from the few who rise. It is about the lessons carried by legendary traders who once struggled just like you, but who chose to face the mirror instead of turning away. And if you listen closely, you may discover that what you have been searching for in the market was never out there. It has been within you all along. The market does not think. It does not feel. It does not care. And yet, to the trader staring into the glowing abyss of their screens, it can feel alive, like a predator breathing just beyond sight, or like an ocean that knows when you are unprepared to swim. Every candle, every tick, every shift in price is not a whisper of the future. It is a reflection of the present moment, and more specifically, of you. The market is a mirror, cold, merciless, and flawless in its clarity. At first, most traders believe they are here to analyze the charts. They imagine themselves as hunters of patterns, as scientists measuring probability. They line up their indicators, draw their support and resistance, and step into the market thinking they are armed with knowledge. But soon, they realize something disturbing. The charts are not the problem, their reactions are. Consider the trader who swears they will follow their plan. They write it down. They rehearse it. They enter the trade with conviction. But then the market twitches against them, just a little, and suddenly their chest tightens. They feel a rush of urgency, a need to adjust, to override the very system they built. Why? Not because the chart changed, but because their fear of loss echoed louder than their commitment to discipline. Another trader holds on to losing trades far longer than they should. Rationally, they know the stop loss was there for a reason. But something deep inside whispers, wait, it might turn. And beneath that whisper is something even older, an echo from childhood, from every moment they were afraid to admit they were wrong. The market simply gave that hidden wound a stage to perform upon. This is why legendary traders insist. The market is not your opponent. It is your reflection. If you chase trades recklessly, perhaps you once chased love, or approval, or validation. If you size up recklessly, perhaps you are still trying to feel powerful in the places life once made you small. If you refuse to cut losers, maybe you have never forgiven yourself for failing before. One trader once said, "I realized I was trading my father's voice." He meant that every loss felt like a judgment, every mistake an echo of disapproval that he had carried since childhood. Another admitted, "I was chasing the market the same way I chased relationships, never satisfied, always afraid of missing out." These are not just financial decisions. They are reenactments of identity. And this is what makes the market terrifying. Because it never lies. When you blow up an account, you can blame the news, or the volatility, or the broker. But deep down, you know the truth. It wasn't the candlesticks that betrayed you. It was your impatience, your pride, your greed. It was the part of you that hoped discipline was optional, that maybe this time the rules didn't apply. The market held up its mirror, and you saw yourself more clearly than you wanted. Some people cannot handle this. They walk away from trading, declaring it too risky, too random, too unfair. But in truth, what they could not bear was the mirror. They were not ready to face the unresolved impulses that lived inside. And yet, for others, this mirror is the very gift. They recognize that the reflection is not a punishment, but a teacher. If fear shows up every time after 3 losses, they note it down. If greed arrives when their friend posts a big win, they journal it. Slowly, they begin to see patterns, not in the market, but in themselves. They realize that the real edge is not in predicting price, but in predicting their own impulses. This is why the best traders become students of their inner world. They study their emotions the way others study charts. They observe how their hands shake, how their breath shortens, how their mind invents reasons to justify a bad hold. They do not try to erase emotion, for that is impossible. They learn to respect it, to study it, to disarm it. Think of it like this. The average trader treats the market as a battlefield. Every trade is a war to be won. But the legendary trader treats the market as a dojo. Every trade is a practice, a chance to see where the mind still clings, where the ego still resists, where the old wounds still rule. And slowly, something remarkable happens. Trading shifts from panic to performance, from chaos to flow. The trader no longer fears the reflection. They welcome it, because every time the mirror reveals another hidden impulse, they gain a chance to master it. Imagine a trader staring into that mirror after a devastating loss. They no longer say, "The market betrayed me." Instead, they whisper, "This is who I was today, and tomorrow I will return as someone new." This is why some call the market the greatest therapist you could ever have, not because it comforts you, but because it never lies to you. It does not flatter. It does not sugarcoat. It simply reflects back what you bring, with perfect accuracy. If you bring greed, you will see it. If you bring fear, it will be amplified. If you bring discipline, patience, humility, you will see those too. And in that reflection lies the possibility of transformation. The truth is, very few people want to know who they really are. They prefer the illusions, the stories they tell themselves. They prefer to believe they are disciplined when they are not, to believe they are patient when they are impulsive, to believe they are brave when they are terrified. The market strips all of that away. And if you allow it, it can strip you down to something purer. This is why the market is a mirror. Because what you see is not just price action. What you see is yourself. And if you can learn to face that reflection without flinching, if you can look into the mirror and see both your flaws and your strengths with equal clarity, you will gain the only edge that truly matters, the edge of self-awareness. Because in the end, the market is not testing your predictions. It is testing your identity. And the trader who learns to master their reflection masters everything. The myth of trading is that courage makes you rich. That the boldest traders, the ones who slam down massive positions, who stare at the screen with fire in their eyes, are the ones destined to walk away with fortunes. Movies, magazines, even trading chat rooms feed this illusion. Bravery equals profit. But step into the lives of the true legends, and you will hear something shocking. They do not call themselves brave. They call themselves cowards. Yes, cowards. Not the kind of coward who runs from opportunity, but the kind who respects danger so deeply that survival itself becomes the edge. The greatest traders in history were not those who pushed hardest, but those who knew when to step back, when to cut size, when to whisper to themselves, "Be careful, stay small, protect yourself." Tony Saliba, one of the legends, turned $50,000 into $8 million. When asked about his secret, he did not talk about a flawless system or a brilliant prediction. He talked about his obsession with risk control. He would shrink his position after a win, not grow it. He would leave the desk mid-trade if something felt wrong. And when a trade looked too perfect, when it felt too good to be true, that was his signal to get out. This sounds backwards, doesn't it? The world tells you to double down on confidence, to let winners run. But the true masters know that confidence is a trap. The moment you believe you cannot be beaten, you are already bleeding. Fear, on the other hand, sharpens you. It keeps your hands steady. It whispers caution when euphoria clouds your mind. Tom Baldwin, one of the biggest bond traders in history, moved thousands of contracts in minutes. From the outside, he looked fearless, aggressive, unstoppable. But listen closer. Underneath, his mind was wired for defense. He was not chasing glory. He was scanning for danger. His size was calculated to the decimal. His losses were cut before they could metastasize. The market was not his playground. It was a canyon, and every step across the tightrope required humility. And here lies the paradox. Amateurs think courage is holding on. Professionals know that true courage is letting go. Letting go of bad trades. Letting go of pride. Letting go of the intoxicating need to be right. One trader told Schwager, "Every time I start to feel confident, I size down." I want to feel like I could lose because that keeps me sharp. Another said, when a trade feels too comfortable, I get nervous. The best trades are often the most uncomfortable ones. Think about that for a moment. To the average trader, fear is the enemy. They try to banish it, numb it, drown it in bravado. But the elite do something radical. They make fear their ally. Fear becomes the compass, pointing them away from danger, reminding them of their mortality, anchoring them to reality. Imagine standing on the edge of a cliff. The average trader stares at the view, intoxicated by the beauty, and takes one reckless step forward. The master trader stares at the wind, feeling its shift, calculating its threat, and plants their feet firmly. One sees opportunity, the other sees risk, and only one survives long enough to keep playing the game. Fear is not weakness. Fear is awareness. Fear is what keeps your capital alive through storms. Fear is what whispers, don't get greedy, don't get sloppy, don't forget that survival is the real victory. There is an old trading joke. What's the fastest way to make a small fortune in the market? Start with a large one and forget about risk management. The humor cuts because it's true. Most traders don't blow up because they lacked courage. They blow up because they lacked fear. Fear doesn't paralyze the great traders. It activates them. They are meticulous with stops, obsessive with size, ruthless with discipline. Every trade is measured not just by potential profit, but by the worst-case scenario. They rehearse the downside. They imagine the loss before they enter, and because of that, they last. Think of the psychology shift this requires. Most people enter trading hungry for wins. They crave the high of profit, the thrill of the green candle. But the legends, they enter scanning for what could kill them. They don't ask, how much can I make? They ask, how much can I lose before I destroy myself? This is the real alchemy of fear. When you integrate it, fear stops being something to fight. It becomes your guardian, your guide. Every tremor in your chest becomes a message. Slow down. Respect the risk. Don't get carried away. Survival, not conquest, is the path to mastery. But this truth is hard for most to swallow. Because society celebrates bravery, the hero who charges into the fire, the entrepreneur who bets it all, the gambler who wins big at the roulette table. But trading is not a Hollywood script. Trading is an endless marathon across shifting ground. And the one who survives longest wins. Picture two traders side by side. One is glowing with confidence after a streak of wins. He doubles his size, his hands trembling with excitement. The other, after a streak of wins, quietly cuts his size in half, wary of the overconfidence seeping in. Weeks later, the first trader is gone, account wrecked by one bad turn. The second, still here, steady, alive. The second trader understood what the first never did, that fear is not your enemy. Overconfidence is. And so, the legends whisper a strange truth. What if you don't need more courage? What if you need more fear? This shift can transform everything. Suddenly, fear is not a signal of weakness, but of alignment. It keeps you small when you're tempted to go big. It makes you hesitate before pressing the button in a reckless chase. It reminds you that the game is not about glory. It is about survival. Bravery does not make you rich. Survival does. And survival comes from fear, sharpened into discipline. The next time you sit before your screen, heart racing, palms sweating, and that old voice tells you to conquer your fear, stop. Instead, listen. Ask what the fear is trying to protect you from. Ask what danger it sees that your excitement has blinded you to. And then honor it. Because fear is not a weakness. Fear is your edge. Every trader begins the journey with a dream. Somewhere out there, hidden deep within the charts or the code or the books, is the Holy Grail. A perfect system, a secret formula, a magic indicator that will reveal the future like a crystal ball. The fantasy burns bright in the mind of the beginner. If only they can find it, all the struggle will vanish. And so they search. They scour forums. They buy courses. They download endless indicators, plastering their charts with rainbows of moving averages, Fibonacci arcs, oscillators with names that sound like spells. They believe salvation lies in one more tool, one more tweak, one more guru whispering the truth. But the Holy Grail does not exist. Ask the legends, and they will laugh at the very idea. They will tell you that no strategy, no system, no single method works forever. Markets change, conditions shift. What thrives in one season dies in another. A strategy that mints money in a bull run collapses in a bear. A pattern that sings in quiet markets fails in chaos. The Holy Grail is a mirage, a cruel joke played by hope itself. And yet, there is something deeper. While no Holy Grail exists, there is something more powerful, the personal edge. The personal edge is not a formula. It is not a universal truth. It is the intersection between the trader and the market, a living relationship unique to each individual. What works for one trader may destroy another. One thrives in scalping quick moves, living in the noise of the 1-minute chart. Another thrives in patience, waiting weeks for a setup to ripen on the daily chart. One finds flow in fundamental research, another in pure technicals, another in market structure. The key is not to find the grail, it is to find yourself. This is the first true heartbreak for many traders. They want certainty. They want the comfort of someone else's answers. They do not want to face the fact that no one can give them the path. They must build it themselves, out of their own psychology, temperament, and discipline. Think of the greats. Ed Seykota thrived with long-term trend following, living with huge volatility swings that would terrify most traders. Marty Schwartz, on the other hand, was a short-term scalper, turning quick bursts of movement into steady profits. Both made fortunes. Both played different games. The Holy Grail wasn't in the system. It was in the alignment between system and self. Your edge is a mirror of your personality. If you are impatient, trying to trade weekly charts will suffocate you. If you crave calm, scalping will drive you mad. If you cannot stomach big swings, trend following will break you. Every failure to trade someone else's system is not a failure of intelligence. It is a failure of fit. And this is where so many traders bleed. They see another's success and assume it can be copied. They try to wear someone else's armor, wield someone else's sword, but the market cuts through the disguise. What is borrowed will break. Only what is truly yours will last. This is the bitter irony. The Holy Grail seekers run endlessly in circles, chasing new methods, abandoning them at the first sign of failure, then chasing again. They never realize that the search itself is the trap. The true answer has always been to stop seeking and start building. To refine, iterate, adapt. To choose a path that fits who they are, and then commit to mastering it. The market, after all, rewards persistence, not novelty. It rewards depth, not breadth. A shallow knowledge of 20 systems is worthless compared to deep mastery of one that fits your psychology. And yet, even mastery is not a finish line, because the edge is alive. It shifts as you shift. What worked for you 5 years ago may no longer fit who you are today. As your risk tolerance changes, as your life changes, your trading must evolve. This is why even the best traders reinvent themselves again and again. They do not search for holy grails. They refine their edges. Some traders keep journals not just of trades, but of themselves. They track not just entries and exits, but moods, impulses, emotional states. They ask, why did I take this trade? Was it aligned with my system, or was it ego? Was it my edge, or was it me chasing someone else's ghost? Over time, patterns emerge, not of the market, but of the trader's soul. And within those patterns, the personal edge reveals itself. This is why no book, no guru, no mentor can hand you the answer. They can hand you tools. They can share wisdom. But the edge is forged in your own fire. It is built from your scars, your mistakes, your persistence. It is less like discovering treasure and more like carving a statue from stone. Slowly, painfully, with every strike of the chisel, something unique emerges. And here lies the strange beauty. Once you stop seeking the Holy Grail, you realize you never needed it. The Grail was a distraction. The real journey is inward. The Grail is not out there. It is you. So the next time you feel the urge to chase another indicator, another system, another guru, pause. Ask yourself, what actually fits me? What brings me calm? What makes sense not just intellectually, but emotionally, physically? Where do I feel rhythm with the market, rather than struggle against it? Your edge is not about being perfect. It is about being authentic. And authenticity is rarer than any grail. The legends know this. That is why they stop searching. That is why they settle into the systems that fit them, imperfect as they may be, and refine them until they shine. They are not hunting certainty. They are cultivating alignment. And in that alignment lies the only holy grail that truly exists, the one you forge for yourself. Every trader has a breaking point. It does not matter how skilled, how intelligent, how disciplined they think they are. Sooner or later, the market finds a way to crack them open. For some, it happens quickly. A reckless bet, a margin call, a cascade of losses that wipes out months or years of progress. For others, it creeps slowly. Death by 1,000 cuts. Small losses piling up until despair swallows them whole. But the pain always comes. It is the law of trading. You cannot step into the arena of uncertainty, of volatility, of chaos, without paying the price. And when it arrives, it does not knock politely. It slams you into the dirt, rips apart your ego, and dares you to get back up. The legends of trading are not legends because they avoided blowups. They are legends because they survived them. Take Paul Tudor Jones. Before he became one of the most successful hedge fund managers in history, he blew up an account so badly that he had to borrow money just to get back into the game. He has said again and again that losing everything early on was the best thing that ever happened to him. It taught him humility, risk control, and the truth that no trade is worth dying over. Or consider Jesse Livermore, the great speculator of the early 1900s. He made and lost several fortunes over his lifetime. Each blow-up shattered him, and yet each time he found a way to rise again, reinventing himself with new methods, sharper discipline, deeper humility. His story is tragic in its final act, but along the way, his resilience inspired generations. Pain is not the enemy. Pain is the teacher. The first time a trader experiences a catastrophic loss, it feels like death. The heart races, palms sweat, nights become sleepless marathons of regret. The mind replays the trade over and over again, searching for the one moment where they could have stopped the disaster. But as brutal as it feels, that collapse carries the seed of transformation because pain strips away illusions. Before the blow-up, the trader believes they are invincible. They believe they can outsmart the market, bend it to their will, trade recklessly, and still come out on top. Pain takes that arrogance and burns it to ash. In the ruins, humility begins to grow. It is only after tasting the fire that the trader begins to understand. Risk management is not a suggestion. It is survival. Position sizing is not a boring detail. It is everything. Ego is not an asset. It is the sharpest liability. The legends remember their blow-ups with strange reverence. They do not speak of them as shameful scars, but as sacred turning points. They know that without those collapses, they never would have become who they are. The pain was the initiation rite, the market's brutal way of testing whether they truly belonged in the game. Transformation begins when the trader chooses to face the pain instead of fleeing it. Many cannot. Many blow up once and walk away forever, convinced the game is rigged, or that they simply do not have what it takes. But those who stay, those who dare to study their own wreckage, discover a gift hidden in the ruins. They see their own patterns: recklessness, overconfidence, revenge trading, greed, fear. They begin to map the dark corners of their psyche that the market so mercilessly exposed. And in that mapping, they grow. One trader might discover they cannot handle leverage, and so they scale down permanently, building longevity instead of speed. Another might realize they cannot chase every move, and so they cultivate patience, waiting for setups that truly resonate with their style. Another may confront their addiction to action and learn the discipline of sitting on their hands. Each blow-up leaves behind a lesson etched in scar tissue. And scar tissue, though ugly, is strong. Over time, the pain that once felt unbearable becomes the bedrock of resilience. A trader who has been through the fire no longer panics when the market turns against them. They have already seen the worst. They know the taste of ruin. They have walked through it and emerged alive. Compared to that, a drawdown is nothing but weather. This is why the veterans speak with such calm, even in chaos. They are not calm because they know the future. They are calm because they have already been destroyed and rebuilt. The market is a forge. Every blowup is a hammer strike. The weak metal shatters. The strong metal bends, cracks, and then hardens into something new. The trader who survives is tempered, transformed, reborn. Of course, not every transformation is beautiful. Some traders never learn, repeating the same mistakes until nothing is left. Others transform in ways that cost them their joy, their health, their peace of mind. The fire must be guided, or it consumes everything. But for those who face it with courage, blowups are not endings. They are thresholds. The trader who survives begins to see the game differently. No longer blinded by greed, no longer obsessed with being right. They begin to focus on longevity, discipline, and process. They trade not to conquer the market, but to dance with it. They respect risk as a partner, not an enemy. And so, the blow-up becomes a paradox. It is both destruction and creation. It tears you apart, but in tearing you apart, it shows you what you are made of. Some say that until you have blown up, you have not truly begun your journey as a trader. That may sound harsh, but in its harshness lies truth. The market does not grant wisdom freely. It demands sacrifice. It demands pain. And only through that crucible can a trader discover who they truly are. So when the blow-up comes, and it will, do not waste it. Do not curse it, deny it, or hide from it. Face it. Study it. Let it break you, and then let it remake you. Because in the end, the blow-up is not your enemy. It is your initiation. It is the gate you must pass through if you want to stop being a gambler and start becoming a trader. It is the pain that transforms. And transformation is the only true profit. Nobody tells you this when you begin. The secret to lasting in the markets is not winning. It's losing. Strange, isn't it? Every glossy advertisement, every online guru, every excited YouTube thumbnail screams about victory. The $1 million trade, the Lamborghini, the green-filled P and L screen. Nobody posts screenshots of red days. Nobody boasts about the trade they cut for a loss within 2 minutes. And yet, if you listen carefully to the true legends, they speak about losing with reverence. They speak of it as a skill, an art, a discipline. Winning feels good, but losing well is what keeps you alive. Think about it. Everybody loses. The difference is how. The amateur fights the loss. They curse it, chase it, double down in anger, or let it grow until it consumes them. Their ego cannot bear the wound. Their identity is so tied to being right that being wrong feels like annihilation. So they resist. And resistance in the markets multiplies pain. The professional does something else. They accept it. They see the red tick, the stop-loss hit, the small loss, and they nod. They record it. They move on. No drama, no self-destruction, because they understand that losing is not failure, it's tuition. One legendary trader told Jack Schwager, "The market charges you tuition to learn." Some people pay once and graduate. Others keep failing the same class until they drop out. That line captures it perfectly. A loss is not a verdict. It is data. It is feedback. It is the market showing you that something in your thesis, timing, or execution was off. That lesson is priceless, but only if you take it cleanly. If you resist it, deny it, or inflate it into disaster, you pay for the lesson, but never learn it. Marty Schwartz, nicknamed Pitbull, one of the most consistent traders Schwager interviewed, turned $40,000 into $20 million. His secret? Not mystical prediction, not supernatural intuition. His secret was cutting losses fast. If the market goes against me, I get out. I don't rationalize. I don't hope. I don't wait. I just get out. He treated every loss not as a personal failure, but as a cost of doing business. Like a store owner paying rent or a farmer buying seed, it was simply part of the game. Contrast that with the average trader staring at a red position. Their hands tighten on the mouse. Their heart pounds. They whisper, "It'll bounce. It has to bounce." They hold. They hope. They pray. And what was once a small paper cut turns into a gaping wound, then a hemorrhage. Losing well is not glamorous, but it is the hidden superpower. Consider this. Many of the greatest traders had win rates under 50%, some even below 40. Imagine that, being wrong more often than you are right, and still making millions. How? Because when they lost small. When they won big. The math worked in their favor. That is the paradox most beginners never grasp. Your win rate does not define you. Your risk management does. Your relationship to losing does. A good loss is like a quick jab. Sharp, clean, leaving no permanent damage. A bad loss is like refusing to defend yourself, letting the punch land again and again until you're on the floor. The legends learn to celebrate the good loss. They know that every time they cut quickly, they are reinforcing discipline. They are protecting capital. They are keeping themselves in the game. And the game is survival. There's an old joke among traders. What's the difference between a new trader and an old trader? The new trader thinks every loss is the end of the world. The old trader knows it's just Tuesday. That joke hides deep wisdom. Losses are inevitable. They are part of the rhythm of trading. They are not catastrophes. They are simply days. But how do you get there? How do you train yourself to lose well when your whole being rebels against it? The first step is reframing. Stop thinking of losses as failures. Start thinking of them as business expenses. A store doesn't collapse because they paid rent this month. A farmer doesn't despair because they had to buy seeds. These are costs of operating. A trader's cost of operating is losing. The second step is discipline. Predetermine your stop before you enter. Place it. Respect it. When it triggers, obey it instantly. No debate. No bargaining. The market is not a courtroom. It is a mirror. The stop is your line in the sand. Cross it, and you're in the territory of hope, not discipline. The third step is detachment. Do not measure yourself by single outcomes. Measure yourself by consistency of process. Did you follow your rules? Did you honor your stop? Then even if it was a loss, it was a victory. This is the mindset shift that liberates. Suddenly, losses lose their sting. They become routine. They become bearable. They become tools. And once losses stop scaring you, something magical happens. You trade with freedom. You are no longer shackled by the need to be right. You no longer fear the market's judgment. You are free to execute, to adapt, to flow. It is not about avoiding pain. It is about mastering it. Think of the samurai. They did not train to avoid death. They trained to meet it with composure. In the same way, traders do not train to avoid losses. They train to meet them with grace. So, the next time you take a loss, pause, smile even. Ask yourself, was it disciplined? Was it small? Was it aligned with my plan? If yes, then celebrate it. Because that small red trade is the brick that builds your fortress. Over time, losing becomes not just tolerable, but empowering. Because every loss you master makes you harder to break. Every disciplined exit strengthens your edge. Every red day you survive adds to the weight of your resilience. And here's the final paradox. The trader who learns to lose best eventually wins biggest. Because in the long run, trading is not about being right. It is about staying alive. It is about protecting your capital, your confidence, your mental health. It is about showing up tomorrow with the clarity to try again. A loss well taken is not a step backward. It is a step forward, into discipline, into longevity, into mastery. So, lose. Lose often. Lose small. Lose with grace. Because losing, when done well, is not the opposite of winning. It is the foundation of it. People love the myth of the trading genius, the prodigy, the savant who stares at a chart, squints, and just knows. No analysis, no signals, no hesitation, just an instinct that never seems to miss. It's a seductive fantasy, isn't it? The idea that some are born with a supernatural gift, a sixth sense for the markets, that if you're lucky enough to be one of them, riches flow easily. And if you're not, well, maybe you should give up before you waste your time. But here's the truth. The legends will tell you. Intuition is not magic. It is not innate. It is not given. Intuition is earned. Every trader who seems like a natural has walked through years of fire to get there. They've stared at thousands of charts, endured countless losses, and recorded every detail. They've lived inside the rhythms of the market so long that the patterns live inside them. Their so-called instinct is not a gift. It's memory. Take Bruce Kovner, one of the most famous traders of all time. He once turned a few $1,000s into hundreds of millions. People thought he had a mystical edge. But when interviewed, he explained it differently. He said, "There comes a point when you feel something is off. You can't explain it perfectly, but you sense danger. That's not superstition. That's subconscious synthesis." His brain had absorbed so much data, so many repetitions, that it could fire warnings faster than his conscious mind. This is the essence of intuition. It is not a lightning bolt from nowhere. It is the silent accumulation of 10,000 trades. Neuroscience even backs this up. Psychologists call it implicit learning. Your brain, when exposed to enough repetitions, builds a deep internal model. Athletes use it when they feel the momentum of a game shift before the score shows it. Musicians use it when they anticipate the next chord without thinking. Traders use it when they sense a breakout is weak before the candle even closes. But here's the problem. Most beginners confuse intuition with impulse. They feel a rush, a vibe, a sudden urge to jump in because this one feels right. They call it gut instinct, but it's not. It's adrenaline. It's fear dressed up as wisdom. Real intuition is quiet. It whispers, not shouts. It's calm, not urgent. And it only arrives after years of exposure, reflection, and deliberate practice. One trader described how he trained it. He would narrate the market aloud as he watched it. Price is stalling here. Buyers look hesitant. Volume isn't confirming the breakout. He wasn't just watching. He was teaching his nervous system to interpret. Day after day, repetition after repetition, until eventually his gut began to know without words. But there's another key: feedback. Intuition only develops when you track, review, and learn. Journaling, recording trades, reviewing mistakes, feeling the sting of losses and the rhythm of wins. Without feedback, your impulses never evolve. They just stay raw, chaotic, unreliable. Think of it like fire. Uncontrolled, it burns down your house. Controlled, it cooks your food and warms your home. The difference is discipline. So, if you don't trust your gut yet, good. That means you're honest. It means you haven't put in enough reps to earn it. It means your gut is still hungry, not wise. The great traders will tell you. They spent years ignoring their gut until one day something shifted. They had done the work. They had seen enough patterns. Their subconscious had built its own radar. And suddenly, their gut stopped screaming and started whispering. And that whisper was golden. But even then, even with years of training, intuition is dangerous if not paired with humility. Overconfidence disguises itself as instinct all the time. You feel certain, you size up, and suddenly your intuition is just ego in costume. That's why veterans constantly cross-check. They listen to their gut, but they also measure, test, and verify. They don't worship instinct. They partner with it. So, what does this mean for you? Sitting in front of your charts, waiting for that legendary intuition to arrive. It means you don't shortcut the grind. You don't skip the boring stuff. You track every trade. You review your emotions. You speak the market out loud. You earn the right to trust your gut by feeding it with data, with discipline, with scars. And one day, when you've logged enough hours, when you've survived enough pain, when you've trained your nervous system with ruthless honesty, your gut will change. It will stop being a reckless gambler. It will become a quiet guide. But don't be fooled. Intuition isn't the finish line. It's just another tool. Powerful, yes, but dangerous if you lean on it blindly. The legends don't treat intuition as gospel. They treat it as one more signal, an inner one, always balanced with risk control, humility, and process. Because in the end, intuition doesn't save you from discipline. It is born from discipline. And that's the paradox most traders miss. They want the magic without the grind. They want the gut without the reps. They want the whisper without the years of silence. But there are no shortcuts. Intuition is not given. Intuition is earned. There is a moment in every trader's journey that feels intoxicating. You've strung together a series of wins. The setups were clear, the entries sharp, the exits smooth. Your account balance ticks higher with each trade. The market seems to bend to your will. Confidence swells in your chest like a rising tide. And then it whispers the most seductive thought of all. This time, go bigger. That's the moment when countless traders have died, because position size is not just about numbers. It is about psychology. It is about how much pressure you can withstand before your discipline cracks. Jack Schwager's interviews in the New Market Wizards reveal this again and again. More traders are destroyed by size than by bad ideas. Not because their analysis was wrong, but because their size was too big for their mind to handle. Think of it this way. Small size is like sparring. You can stay calm, learn technique, breathe. But when you suddenly step into the ring with heavyweights, the punches feel different. The fear spikes. Your breathing shortens. You forget the basics. Trading works the same. A trader who is calm and precise at one contract suddenly becomes reckless and panicked at 10. The chart hasn't changed. The market hasn't changed. The only thing that changed was the size, and that changed everything. One legend put it bluntly: the fastest way to end a winning streak is to bet like you deserve one. Another veteran told Schwager, "When I feel good, I start getting scared. That's when I know to reduce size." Do you see the paradox? Amateurs bet bigger when they feel strong. Professionals bet smaller because they know that overconfidence is the silent killer. Size magnifies everything. Profit, yes, but also fear, greed, ego, doubt, discipline. You might think you're calm, but size will test you. Increase your risk fivefold, and suddenly every tick feels like life or death. Your time horizon shrinks. Your palms sweat. The setup you believed in dissolves under the weight of your survival response. And that's why so many great traders treat size like bomb disposal. Carefully, slowly, deliberately. They know the danger is not just the loss of money. It is the loss of self-control. One story stands out. A trader built a streak of massive wins. His confidence soared. He convinced himself he had finally cracked the code. So he sized up, huge. One trade, bigger than all before. And the market turned. He froze. Couldn't cut. Couldn't breathe. By the time it was over, he had erased months of profits in a single afternoon. The market didn't destroy him. His size did. This is the cruel irony. Size feels logical when you're winning. I've earned this. I deserve to press my edge. But what you've really earned is the right to stay consistent, the right to keep doing what works, not to gamble more. Professionals understand this. They don't think in terms of how much can I make? They think in terms of how much pressure can I handle before I self-sabotage? And so they adopt rules. One trader had a simple one. He sized down after every win, never after a loss. Because wins inflate the ego, losses humble it. By cutting size after a win, he protected himself from hubris. Another trader refused to increase his risk unless he had executed his process flawlessly for weeks, not just because of P and L, because he knew size was not a reward. It was a responsibility. Here's the dangerous illusion. Size is often mistaken for progress. You feel like you're leveling up when you increase it. But trading is not a video game. You don't unlock new weapons with higher stakes. You just expose yourself to higher emotional pressure. The truth is, the real growth is internal. Progress is measured not in how big you trade, but in how cleanly you execute. The market doesn't care if you size up. It only cares if you stay disciplined. Here's a saying from Wall Street: bulls make money, bears make money, pigs get slaughtered. The pig is the trader who sizes up out of greed, and the slaughter is always waiting. So what do you do? How do you protect yourself from the seductive danger of size? You start by knowing your threshold, the number where your breathing changes, your discipline cracks, your hands shake. That's your edge of comfort. Stay below it. Train below it. Because mastery is not about pushing your threshold. It's about staying consistent inside it. Over time, with discipline, your threshold expands naturally. But forcing it? That's suicide. Ask yourself, when you place a trade, are you thinking about the chart or about the money? If the money is louder than the chart, your size is too big. Because the moment your psychology bends under the weight of position size, the game is already lost. So shrink it down. Trade small with a big mind. Build your process like a fortress, brick by brick. Let size grow only as your discipline grows, not as your ego demands. The best traders in the world are not the ones who bet the biggest. They are the ones who last the longest. And they last because they respect the bomb they're holding every time they increase their size. So the next time you're tempted, the next time the whisper comes, go bigger, pause. Remember, size doesn't just test your account. It tests your soul. And the trader who survives is not the one who conquered size. It's the one who respected it. Most people come to the market for money. They open their charts. They scan the headlines. They stare at tickers and dream about wealth. They imagine a life transformed. Freedom from the 9 to 5, exotic vacations, and endless comfort. But here's the truth. The legends whisper. Trading is not about money, not at its core. It is about awakening. The market is not just a machine for profit. It is a mirror, a dojo, a place of training, a spiritual gymnasium where every trade is a test, every loss a lesson, and every rally a chance to face yourself. Think of the martial artist. They enter the dojo not to collect trophies, but to discipline their body and spirit. The repetitions, the bruises, the long hours on the mat, They aren't glamorous, but they forge character. Trading works the same way. Behind every entry, every stop, every exit is a deeper question. Who are you becoming? Jack Schwager's interviews reveal this hidden thread. Read between the lines and you see it clearly. The most successful traders didn't just evolve their systems, they evolved themselves. They entered the market full of ego, fear, and greed, and the market stripped it away. Trade by trade, they were confronted with their shadows. One trader admitted, "At first, I wanted to beat the market. Then I realized the real battle was against myself, the worst parts of me." That is the dojo. The candles on your screen are not just prices. They are strikes from an opponent. Every hesitation, every rush of greed, every stubborn refusal to cut a loser, that is your shadow stepping onto the mat. And the market does not lie. Lose discipline, and you pay instantly. Refuse humility, and you're punished. Cling to ego, and your account bleeds. The dojo is ruthless, but it is also fair. Here's the paradox. The harder you try to dominate the market, the more it humbles you. The moment you let go of the need to control, you begin to flow. This is why so many veterans speak of trading in spiritual terms. They don't wear robes. They don't burn incense, but they've walked through long nights of self-confrontation, and they've emerged with something deeper than money. One trader said, "The moment I stopped needing the market to validate me was the moment I became profitable." Think about that. The shift wasn't in his system. It wasn't in his indicators. It was in his identity. That is what the dojo does. Like martial arts, the lessons are not learned in one glorious moment, but through repetition, through countless small battles, through watching your flaws exposed and refusing to look away. You learn detachment. You learn humility. You learn presence. Eventually, you realize you cannot force the market, just like you cannot force life. You start to let go, not in a weak way, but in a powerful way. You act without needing. You execute without chasing. You accept without collapsing. And slowly, something shifts. Your wins no longer inflate you. Your losses no longer destroy you. You stop being whipped around by outcomes. You root yourself in process, in discipline, in stillness. That is the deeper prize of the dojo, identity transformation. Before enlightenment, buy low, sell high. After enlightenment, buy low, sell high. The actions look the same. The charts look the same. The difference is who you are when you act. And that difference changes everything. Because when you no longer need the market to confirm your worth, you are free. Free to follow your edge without fear. Free to take small losses without shame. Free to sit out when there is no trade. This is why Schwager's wizards radiate such calm. They are not chasing the market. They are not at war with it. They are in training with it. Every trade is sparring. Every loss is a bow to the teacher. Every win is simply another rep in the practice. So, if you are frustrated, if you are exhausted, if you feel like the market is punishing you, it's not. It's teaching you. It's holding up a mirror and saying, "This is who you are right now. Do you want to stay that way?" The dojo is not easy. It is not gentle, but it is the most honest teacher you will ever meet. And the prize is not just a bigger account. The prize is a stronger self. So enter the dojo with humility. Train daily. Let every chart, every candle, every trade refine you. Because in the end, the market's greatest gift is not profit. It is transformation. Watch a great trader work. Not their entries, not their exits, not even their profits, but watch them. Really observe. You'll notice something strange. They don't look excited. They don't look anxious. They don't even look particularly impressed with themselves when the market moves in their favor. Instead, they look boring, calm, methodical, almost robotic in their rhythm. And that's the paradox. The best traders in the world don't fall in love with outcomes. They fall in love with process. Outcomes, after all, are fickle. The market doesn't care about your predictions. A perfect setup can lose money. A sloppy mistake can sometimes win. If your worth is tied to results, you'll live and die on a roller coaster of emotions, ecstatic on green days, broken on red days. But process, that is where consistency lives. Jack Schwager's New Market Wizards interviews reveal this over and over. The moment a trader starts to obsess over outcomes, they start to betray the very thing that brought them success: discipline. And discipline only exists inside the process. One trader put it like this: "I stopped caring if I was right. I only cared if I followed my rules." Think about how radical that is. Most beginners crave being right. They want to call the top, nail the bottom, prove their intelligence. But the legends don't care. They care about execution. They care about ritual. They care about the system that holds them steady when everything else is chaos. Because the truth is, the market thrives on randomness. You cannot control outcomes. You can only control inputs: your preparation, your risk, your discipline. This is why process is more powerful than profit. One of Schwager's interviewees described a day where he followed his system perfectly. Every stop, every exit, every confirmation, and still lost money. But he walked away smiling, because that was a perfect day. The market didn't reward him, but the process did. And here's the secret. When you stay rooted in process, your self-worth stops fluctuating with your P and L. You become bulletproof. Most traders ride emotional whiplash. They win. They feel like gods. They lose. They feel like garbage. Their identity is tied to every tick on the screen. But the masters? They anchor their identity in discipline. They measure themselves not by profit, but by precision. Did I follow my plan? Did I respect my risk? Did I execute cleanly? That becomes the scoreboard. This is why great traders look boring. Their rituals are steady. They wake up at the same time. They scan the same setups. They execute the same way. Not because they lack creativity, but because they understand rhythm. Process creates rhythm. Rhythm creates edge. It's like being a musician. The crowd hears the improvisation, but the foundation, the scales, the rhythm, the hours of disciplined practice, that's what makes the improvisation possible. Trading is the same. The market hears your improvisation, but the foundation, the process, make sure you don't collapse when the music shifts. And here's another paradox. Falling in love with process makes you more flexible, not less. Because when you're tied to outcomes, you cling. You hold losers too long because you need to be right. You overstay winners because you need more. But when you're tied to process, you can let go instantly. Loss? No problem. I followed the rules. Win? Great, move on. The flexibility emerges because your ego isn't attached. One trader journaled it this way: bad day for the account, great day for discipline. I'll take it. Imagine how powerful that mindset is. A trader who can lose money but still feel victorious because the process was honored. That is the psychology that survives. So here's the challenge. What if you stopped measuring yourself by profit and started measuring yourself by process? For the next week, don't ask, how much did I make? Ask, how well did I execute? Rate yourself not on outcomes, but on discipline. Did you skip an emotional trade? Did you take the stop without hesitation? Did you avoid revenge trading after a loss? That is the real scoreboard. Because in trading, your outcomes are just echoes of your process. When the process is clean, the profits will follow. Not immediately, not every day, but inevitably over time. But if you chase outcomes, you will sabotage the process. And once the process is gone, the profits evaporate. The irony? The trader who ignores profits for process ends up making more profits than the one who chases them. This is why the greats see trading as ritual. Not superstition, not mechanical emptiness, but ritual, a sacred rhythm that builds identity. Because process doesn't just protect your account, it protects your mind. The market will always be chaos. Headlines, reversals, fake outs, black swan events, always beyond your control. The process is the one thing that belongs to you. Your discipline is the hedge against randomness. And when you master that, you no longer need the market to validate you. You generate your own stability. That's why Schwager's legends endure. Not because they won more often than others. Many had win rates under 40%, but their process was airtight. Their losers were small. Their winners were big. And over time, process beat outcome. So the next time you open a chart, remember, the market doesn't care about your goals. It doesn't care how much you want to make this week. It doesn't care about your dreams of freedom. It only cares about one thing. Will you follow your process, or won't you? And that's the deeper wisdom. You don't rise to the level of your goals. You fall to the level of your discipline. Process over outcome. Always. Conviction. It's one of the most celebrated words in trading. Every book, every mentor, every motivational video tells you that you must believe in your ideas. Hold strong in the face of uncertainty. Trust your gut and stay committed. And yet, conviction, without its twin, flexibility, has destroyed more traders than fear ever could. Because conviction alone is not strength. It is stubbornness. The paradox is simple. The greatest traders in the world act with deep conviction, but they are ready to abandon it instantly if the market proves them wrong. They hold their beliefs tightly enough to act, but loosely enough to release. This is the dance. Conviction with flexibility. Jack Schwager's interviews reveal this paradox in trader after trader. One wizard told him, "I'm always confident in my trade until I'm not. And when I'm not, I'm gone." Think about how powerful that is. Confidence is there, but ego is not. Attachment is there, but obsession is not. Most beginners get it backwards. They think conviction means never letting go. They size up. They double down. They refuse to cut because you have to believe in your idea. But in markets, ideas age quickly. Momentum dies. News hits. Trends reverse. And if you are still clinging to yesterday's conviction, you're trading a ghost. The pros know this. They define their conviction clearly, but they also define their exit. They know exactly what will make them change their mind before they even enter the trade. Conviction without flexibility is suicide, but conviction with flexibility is mastery. One trader Schwager interviewed said his greatest edge wasn't analysis, wasn't systems, wasn't intuition. It was the speed at which he could admit he was wrong. "I change my mind faster than anyone I know," he said. That sounds weak to outsiders. Society teaches us that changing your mind is weakness, that backing down means you lack confidence, that true strength is sticking to your guns no matter what. But in trading, that mindset is lethal. The market doesn't reward stubbornness, it punishes it. And so the masters practice what looks like contradiction. They are bold but detached, fierce but flexible, convicted but surrendered. Think of martial arts. If you stiffen your body, you lose flow. Your strength becomes rigidity, and rigidity gets thrown. But if you are all softness, all yielding, you collapse. True mastery is both, firm and fluid, structured and supple. That's trading. Conviction gives you the sword. Flexibility teaches you when to drop it. But how do you practice this balance? First, by defining your exit conditions before your entry. Write down, if X happens, I am wrong. That way, when X appears, you're not making a decision under stress. You already made it. Second, by practicing detachment. Never fall in love with your trade. If you find yourself staring at the screen, hoping instead of observing, your conviction has turned into attachment. And attachment blinds. Third, by journaling not just the wins and losses, but the moments when you changed your mind. Celebrate those pivots. Train yourself to see flexibility not as weakness, but as power. Schwager's wizards did this naturally. They didn't see changing their mind as failure. They saw it as alignment with truth. The truth is not your idea. The truth is the market. And the market doesn't care how strong your conviction is. It will run you over just the same. So what does conviction with flexibility feel like? It feels calm. It feels light. It feels like action without desperation. A conviction trade is one you believe in fully, but you know exactly where you're wrong. And when that point comes, you cut without hesitation. No anger, no shame, no story, just a pivot. Here's the paradox in a sentence. Strong opinions, loosely held, hold conviction like a sword, but hold it lightly enough that you can release it the instant it turns against you. Because in this game, it's not about being right. It's about surviving long enough to thrive. And survival belongs to the trader who can dance, the one who can blend conviction with flexibility until the two are no longer opposites, but partners. The stubborn trader dies on the hill of their own idea. The flexible trader thrives, moving with the market like water. And the master learns to do both at once. We live in a culture obsessed with gurus. Everywhere you look, there's someone shouting, "Follow my signals, buy my course, copy my trades. I'll show you the way." It's seductive, isn't it? The promise that someone out there has the secret formula, that if you just follow them blindly, faithfully, you'll finally unlock the riches you've been chasing. But here's the uncomfortable truth the market wizards revealed. The greatest traders in history don't want followers. They want independence. They want sovereignty. And if you're serious about trading, you should too. Jack Schwager's interviews with legendary traders expose a strange pattern. These wizards made fortunes, yet not a single one of them used the same system. Some scalped tick charts, others held positions for months. Some trusted gut intuition, others relied on complex models. Their edges were wildly different. What united them wasn't a shared method. It was a refusal to outsource responsibility. That is the anti-guru principle. Because here's the danger. The moment you blindly follow someone else, you don't just give away your decision-making. You give away your growth. Think about it. If you're copying signals, who's learning? If you're outsourcing conviction, who's building discipline? If you're letting someone else decide risk, who's strengthening your emotional resilience? Nobody. That's why most people who buy courses, join groups, or follow gurus never become profitable. Not because the strategies are bad, but because they never filter those strategies through the lens of who they are. One trader told Schwager, "My system only works because it's built for my mind, my emotions, my weaknesses." That level of self-knowledge isn't downloadable. It has to be cultivated, and cultivating it means making mistakes, losing money, feeling pain, facing yourself. It's tempting to skip that path, to think you can bypass the hard work by buying someone else's edge. But in reality, all you're doing is delaying your own transformation. The anti-guru principle says this: learn from others, but don't worship them. Extract principles, not prescriptions. It's like jazz. A great musician doesn't copy another solo note for note. They absorb it, twist it, make it their own. They find their voice inside the framework. Trading works the same way. The system is just a skeleton. You supply the soul. One wizard put it simply: don't try to be me. Try to be you, at your best. That's the opposite of guru culture. Gurus say, "Follow me, I know best." The wizards say, follow yourself, because only you know your wiring. But here's why most people resist this. Responsibility is heavy. If you follow a guru and lose, you get to blame them. If you trade your own system and lose, the blame is yours. That accountability is terrifying. And yet, it's the only path to mastery. Because trading isn't just about profits. It's about becoming someone the market can't break. And you can't become that person if you're always hiding behind someone else's decisions. Schwager noticed this too. The wizards weren't arrogant, but they were sovereign. They respected others. They learned constantly, but they never surrendered their decision-making. They didn't abdicate responsibility. And that's the shift. Stop looking for saviors. Start building self-sovereignty. This doesn't mean you reject all learning. Quite the opposite. Study everyone. Read books. Watch interviews. Take notes. But always run the information through your filter. Always ask, does this align with my psychology? Can I actually execute this with discipline? If yes, absorb it. If no, discard it. That's how the anti-guru principle protects you. Because the market doesn't care how much you admire your mentor. It doesn't care if your favorite guru called the last 10 tops. It doesn't care if a system worked for someone else. It only cares if you can execute it with your wiring under pressure. And if you can't, no amount of worship will save you. So stop searching for holy grails in someone else's playbook. Start writing your own. It won't be pretty at first. It'll be clumsy, inconsistent, messy. But over time, it will start to sound like music. Your music. That's when you stop being a student and start being a sovereign trader. And the best part? The moment you stop needing gurus, you stop being prey. Because let's be honest, the guru industry thrives on dependency. It thrives on people who never grow strong enough to stand alone. It thrives on endless searching. But when you claim sovereignty, you become unshakable. You still learn. You still evolve. But you no longer chase. You no longer beg for signals. You no longer surrender responsibility. And that's the power of the anti-guru principle. It returns you to yourself. The wizards didn't become legends by following better leaders. They became legends by becoming their own leaders. And that's the invitation. Stop asking, who should I follow? Start asking, who am I becoming? Because at the end of the day, the market doesn't want you to be a disciple. It wants you to be a sovereign. The question every trader eventually faces is this: are you just trading, or are you becoming a trader? It sounds subtle, but the difference is everything. Trading as a task is external. It's something you do. You open a chart, you click buy, you click sell. But becoming a trader, that's internal. It's something you are. It becomes part of your identity, your psychology, your way of being. And that is what separates the crowd from the market wizards. Jack Schwager's interviews revealed a powerful truth. None of the legends started as prodigies. None were born different. They didn't have secret formulas or magic crystal balls. They weren't financial geniuses who saw patterns others couldn't. They were regular people, scientists, poker players, musicians, business owners who decided to transform. They chose themselves. Every one of them began confused, insecure, uncertain. They made mistakes. They blew up accounts. They suffered humiliations. But instead of quitting, they rebuilt. They let the market strip away arrogance, illusions, and ego until what remained was discipline, humility, and resilience. This is the hidden story. The market isn't just a place to make money. It's a crucible, a fire that burns away everything false, leaving only what's real. And what's real is you, the you that can't be shaken, can't be broken, can't be manipulated by noise or fear. That's what it means to become your own market wizard. Because here's the truth. Schwager never said directly, but every story whispers, trading is just a container for becoming who you were always meant to be. The wizards didn't just find edges, they found identity. Think of Bruce Kovner, who said, "The worst thing that can happen to a new trader is to win big on their first trade." Why? Because it breeds delusion. But failure, pain, loss, those experiences forge character. They transform you. The journey to becoming your own wizard isn't about avoiding loss. It's about integrating it, about letting the pain teach you, about letting the discipline reshape you. And eventually, something changes. You stop chasing the market for validation. You stop needing constant wins to feel worthy. You stop seeing losses as punishments. Instead, you see trading as a mirror. Every win reflects your discipline. Every loss reflects your blind spot. Every day is feedback, chiseling away at the rough edges of your identity. And slowly, you realize you've become someone different. Not a gambler, not a thrill seeker, not a follower of gurus, but a sovereign trader. Someone who owns their process, who walks their path, who knows their wiring. That's when trading stops being about money. Money still comes, but it's no longer the primary scorecard. The new scorecard is growth. Growth in patience, growth in humility, growth in emotional strength, growth in your ability to sit still, to act without fear, to trust the process even when the results aren't immediate. And here's the irony. The traders who stop obsessing about money end up making the most of it because their psychology is unshakable. Their identity is aligned. Their process is consistent. The market was never designed to reward the desperate. It was designed to test who you are. And when you pass that test, you don't just win trades, you win yourself. This is why Schwager's wizards sound more like philosophers than stock pickers. They talk about discipline, humility, resilience, not indicators, not secret signals. They sound like people who went on a hero's journey and returned with treasure far deeper than money, identity. Becoming your own market wizard means asking yourself the hardest questions. Am I trading because I want to prove something? Am I clinging to an identity the market keeps trying to burn away? Am I willing to face my illusions, my fear, my greed, my need to control? Because the market will show it to you, whether you want to see it or not. And if you're willing to face it, you'll transform. One trader, Schwager, interviewed said it best. The market was just the stage. The real drama was inside me. That's the secret. That's the blueprint. The market is your dojo, your crucible, your mirror. Your profits will come and go. Your losses will sting and fade. But your identity, the version of you that emerges from the fire, that's permanent. That's your edge. So stop searching for magic systems. Stop waiting for a guru to save you. Stop hoping the market will reward you for wanting it badly enough. It won't. What it will do is challenge you, break you, teach you. And if you rise to that challenge, you'll become someone the market cannot destroy. That's what it means to become your own market wizard. Not someone who beats the market every time, but someone who no longer needs the market to feel whole. Because the final evolution of trading isn't profit, it's peace. Peace in knowing who you are. Peace in trusting your process. Peace in realizing that no loss can touch your worth. And that is when the market stops being your enemy, your obsession, your tormentor. It becomes your teacher. And you finally become its student. Not just for money, but for life. So here we are, at the end of the journey. You've walked through the 12 rare mindsets of legendary traders. Each one, not just a trading tactic, but a transformation of identity. Along the way, you've seen the market not as an enemy, but as a mirror. Not as a machine for quick profits, but as a dojo for discipline. Not as a puzzle to solve, but as a crucible to grow through. And if there's one thread tying it all together, it's this. The market will always test who you are. You can chase gurus, holy grails, shortcuts, or tips. You can cling to ego, fear, or hope. But in the end, none of that will last. The only edge that endures is the version of you who emerges from the fire, humbled, resilient, sovereign. That's why the true wizards didn't just win money. They won themselves. They became people who could survive storms, face losses with calm, and execute with clarity no matter the outcome. And now, the invitation is yours. Will you keep trading as something you do, a task, an obsession, a game of chasing, or will you step into trading as something you are, an identity forged in discipline, patience, and self-awareness? Because the market doesn't want you to win. It wants you to become someone it cannot break. And when you do, when you truly embody that identity, you'll discover that trading is no longer just about money. It's about mastery. It's about peace. It's about becoming the person you were always meant to be. So remember, your next trade isn't just a position. It's a decision about who you're becoming.